Welcome to the Cashflow Ninja, the podcast sharing how to create and grow income streams and manage, multiply, and protect your wealth in the new economy. Are you tired of trading your time for money? Do you desire freedom today instead of retirement in 10, 20, or 30 years? I'm MC Laubscher, and this is the Cashflow Ninja.
Hello Cashflow Ninjas, MC Laubscher here, and welcome to another episode of the Cashflow Ninja. I have a great show for you today. In today's show, we're going to look at how to buy your equity with life settlement investments. A life settlement is the sale of an existing life insurance policy to a third party for more than its cash surrender value, but less than its net death benefit. There are a number of reasons that a policy owner may choose to sell his or her life insurance policy. In today's episode, we're going to look at the billion-dollar blueprint that banks use to safely and systematically grow their wealth. For decades now, big banks have been tapping into the wealth-growing power of the life insurance industry. Along with their ability to generate wealth comes the safety of having hundreds of years of experience of making money. That's what banks are really good at, right? Well, today we will lift the curtain and show you what the big banks are doing to safely grow their money. Life settlements have generated banks billions of dollars by buying their equity versus just trying to grow it. Definitely something that we can learn from big banks. If you're interested and wanted to learn more about this investment and how you as an accredited investor can now also invest like the big banks, you can access a webinar at thepenumbraplan.com. It's thepenumbraplan.com. And the password is lowercase penumbra. My guest in this episode is Kevin Nichols. Kevin is the managing partner at Penumbra Solutions. Penumbra Funds invest in hundreds of senior life settlement insurance policies with a target yield in the low double digits, no market risks, no premium calls, professional management, and funds locked up safely in escrow. This might be one of the best investments you've never heard of. Again, you could check out the webinar at thepenumbraplan.com, password all lowercase penumbra. This episode was originally published as episode 213, and again, I think this will provide so much value for old and new listeners. That's why I decided to republish it. You can also learn more about life settlements. We've covered it in depth on the show. We've covered it in episodes 118, 213, 299, and episode 401. If you're interested in joining our investors group, you could go to cashflowninja.com/investors group and fill out an application form or email me at info@cashflowninja.com to start the discussion to see if you're a good fit for our group. And if you're living in the Philadelphia, Bucks County, and Southern New Jersey area, we are hosting a live investors meetup event every month in Newtown, Pennsylvania. For more information on the monthly event and information on how to join us at our next live event, you could go to cashflowninja.com/events. And I will also be speaking at the Multifamily Investor Nation Summit coming up on June 27th through to June 29th. It's a 3-day information-packed event for multifamily investors with over 1,000 attendees and over 50 speakers. You will hear from experts about finding deals, raising capital, underwriting strategies, selecting markets, and much, much more. To access the event, you could go to apartmentevent.com to grab your ticket and use promo code NINJA to get $100 off.
If you are like many of the listeners of the show, you're always looking for unique ways to protect and grow your hard-earned capital. But sometimes that's easier said than done. The key to investing late in the cycle is identifying favorable opportunities on a risk-adjusted basis. That's where our friends at ASIM Capital come in. Since 2011, ASIM has helped more than 300 accredited investors allocate more than $20 million to mobile home parks, self-storage, and workforce housing due to the ability to generate asymmetric returns while protecting their investors' portfolios. If you're interested in learning more, head over to asymcapital.com. That's asymcapital.com to get instant access to their investment offerings. MC Lobshier, the host of the Cashflow Ninja podcast and also the president and chief wealth and investment strategist of Producers Wealth, where we help our clients integrate cashflow banking, also known as infinite banking, with their business and investments. If you're interested in learning more about how we create strategies that integrate cash flow banking and investments to turbocharge them, you can access a video series at yourownbankingsystem.com. That's yourownbankingsystem.com. Joining me on the Cashflow Ninja podcast is Kevin Nichols from Penumbra Solutions. Kevin, welcome to the show.
Thank you, MC. Great to be with you.
Can you share a little bit about your background and journey with my listeners?
Sure. My partner and I, we're here in South Lake, Texas, and we have been financial planners and advisors for many years. And back in 2009, I want to say, we developed our own private equity fund for ourselves and our close family members and some high valued clients. And in fact, my dad was our first investor, and he still invests with us every year. And it became kind of a niche for us. And before we could grab a hold of it, it soon became it consumed us and became virtually the only thing that we do now. And so it's still just my partner and I, and we take great pride in what we do and how we do it. But we do offer it to investors actually around the world. And we have hundreds of investors from around the world who take part in our private equity fund. There's one every year that we do. It's the type of private equity fund that it is it's known as a Reg D, Rule 506B fund, and so it's limited as to the number of investors, and it's limited as to the amount of money that we can raise. So it works out very well for our investors. We've never had a client lose a penny, and we're still able to achieve average yields of roughly 10 to 12% annually. It's very low fees, not tied to the market at all, and we're very proud of it. So it works very well. So that's what we do.
And that's why I'm very excited to have you on. It's an asset class that I don't think a lot of my listeners know anything about and know that it exists. And I don't think, for that matter, that a lot of people know that it exists. And it's actually the asset class of life settlements. So can you share a little bit about a little background on the life settlement industry, where it came from, where it ties into the life insurance industry, and why nobody's really heard of this asset class?
Sure. Well, the reason nobody's heard of it is because there are a couple reasons. Mainly because Wall Street doesn't want investors to know about this. They don't like alternative investments because they don't get paid with alternative investments. The asset class has been around. Actually, in 1911 is where it started, where there is a case where a patient of a physician needed some surgery done, and he didn't have any money. And so he offered his doctor his life insurance policy in exchange. And the name of the case is Grigsby versus Russell. And the case ended up being adjudicated later when the patient died, many years after the surgery. And the physician tried to collect on the insurance policy, and the insurance company refused to pay, stating that he had no insurable interest. And the Supreme Court ruled, in fact, it was Oliver Wendell Holmes who wrote the opinion that said, once a life insurance policy has passed the contestability period, which is typically 2 years, it becomes private property, and he can do with it as he pleases. And that case law has held up well over 100 years, and it's been challenged many times, and it has always held up. And so It's an asset class where we know what our absolute payout is going to be. What we don't know is when we're going to get paid. This asset has been used by Warren Buffett, Bill Gates, many large financial institutions around the world, and it is still used today by them. Most people haven't heard of it because it's not available to most people. When we created our private equity fund back in 2009 and we first came to market in 2010, our intent was to make it available to everyone, no matter what investor size. But what we quickly learned is that the rules are such that you can't do that. The SEC will not allow that. And so, unfortunately, the game is somewhat stacked against the average investor. So we made it so that we could accept people into the fund. It's designed for accredited investors, but we can take investors for whom the investment is suitable. It's not something that you want to put your only $50,000 or your last $100,000 into. It's really designed for long-term growth, and it's designed. What we tell people is it's not for all your money, but it's for the money that you can't afford to lose, and it works very nicely. So what we do is we create a new private equity fund every year. We are on Fund 7 right now, and we accept investors into our fund, and it simply becomes a pool of money that we use to purchase life insurance policies from senior citizens who don't want the life insurance policy anymore. Now, we don't go looking for them. We always have a third party law firm. If they don't have an attorney, we make sure that they get one. We will pay for one, in effect. So we don't look for them. They actually raise their hand and say, I don't want this anymore. I can't afford it, and I need the money. So we will then take a look at the policy. We'll look at the company because we're only interested in American life insurance companies, A or better rating, because since 1845, no B plus or better rated life insurance company in America has ever failed to pay on a death benefit or an annuity claim. So we're very confident that we're going to be paid. We're going to receive our money as long as we can continue to make the premium payments. So it works very nicely like that. The average age of the people in our funds is right at 90 years old. So we don't know when people are going to pass. Only God knows that. But we're very confident that on average, most people are not going to live beyond 95 or 96. So typically, we know we're going to get paid out. If we have a fund that has 30 life insurance policies in it, we expect that virtually all of those will be paid within 6 years to 8 years. So what we typically tell people is, if you know you're going to be needing this money in the next 10 years, don't invest it. Keep it on the sidelines. Because we don't want them to count on it for income. We want them to count on it for growth. And so we typically start distributing proceeds from these policies in about year 4, because we have to reserve for premium expense. We want to make sure that we can protect the pool of assets, the pool of insurance policies. So as policies mature and we receive that money, we set that aside. All money is held by Bank of Utah. We don't ever touch the client's money. We don't ever even have access to it. So they manage all the money, and we typically reserve all of the money that comes in the first 4 years or so for future premiums. And once we get to that point, everything is distributed as it occurs. So, and it's worked very nicely. As I indicated before, we've never had a client lose a penny. The average yield's about 10 to 12% annualized. Quite honestly, that's pretty conservative, but we'd much rather be conservative than represent something that it's not. So,
Absolutely, and that's a very good summary just of the industry and so forth. And I mean, I think life settlements are around $500 billion in a $17 trillion industry of life insurance. And for listeners out there that are hearing this for the first time, there's a lot of different sides to this investment, and there's a lot of value being distributed on all sides. So basically, just to summarize, for listeners that are still a little bit confused, is life settlements are life insurance policies that are sold to investment funds by people that no longer can afford them. And that's another question that I had too. What are some of the most common reasons why people would sell them? But before we get to that, they can't afford them, and for whatever reason they would sell it, then this is put into a fund and eventually they mature. Now, it might sound a little bit morbid, but there's a ton of value on both sides of it. For the person selling that policy, I just doing a little bit of brief research here. The industry average, I mean, some of them have looked at 7 times, paid out 7 times more than the cash value that these policies have had. So for the person selling this policy, they will get more money on average from these people buying it than what they would have in their cash values or their death benefits. And you can speak to that too as well, Kevin. So there's value there. There's value for the investor on the other side. I think of is it Ed McMahon? That's a pretty good example of this, from Johnny Carson, that he was actually in financial difficulty and ended up selling his life insurance policies, which secured the assets for his family, and then he was able to live out the remaining years of his life comfortably. So I think, is there anything else you want to touch on what I just mentioned around the value that's created on all sides of this transaction?
The policy is always sold for more than its cash value. It wouldn't make any sense otherwise. Right. Most of the policies that we purchase are universal life policies. We do have some whole life policies, but typically whole life policies don't work for what we do, because whole life policies are intended to build cash value. And as such, the premiums are going to be higher. Right. We don't want to build cash value inside the policies. In fact, we hire an outside company that has actuaries, and they will tell us exactly what we need to pay, the minimum amount that we need to pay, and when we need to pay it to keep the policy in force. We don't want it going into grace. We don't ever want a policy to lapse. We have over 1,700 policies. We've never had one lapse. So the insured always gets more than the cash value, sometimes many times more. Sometimes we will structure a transaction with the family or the insured where they're able to keep a small portion of the death benefit. For example, say there's a $5 million policy. We may agree to purchase the policy for X number of dollars and allow them to keep 20% of the death benefit in the first year and 17% in the second year on a sliding scale. Or maybe it's just a level death benefit that we will allow them. We call that a retained death benefit transactions. We were probably the first company to arrange something like that because we can, and it makes sense for the insured. What we're doing is you're taking a death benefit for the beneficiaries, and you're turning it into a life benefit for the insured. So where Grandma Jones perhaps has family and she can't afford the premiums and needs money now, she can go to her beneficiaries, her children, her grandchildren, and say, "Do you want to pick up this policy?" But frequently they don't want to, or they can't afford to. In fact, they have to sign off on this. They have to acquiesce, because we're not going to be sued. And that's not going to happen because they all sign off on what's happening. So, as does the insurance company. Even though this is a perfectly legal transaction, we have the insurance company in the loop, and they may not like it, but they know it's going to happen, and they know that it's going to pass. Look, here's something we've learned in the last 10 years. The largest purchaser of life settlements in the entire world are the insurance companies. they buy each other's policy. Now, they don't do it in their own name, of course. In fact, the single largest purchaser is AIG.
Very interesting.
So how secure is it? Very secure. Warren Buffett himself, Berkshire Hathaway, the Bill Gates Foundation, Chase, Credit Suisse, the list goes on and on and on. There used to be a time where when Merrill Lynch was in business, where Merrill Lynch, if you had an investment account with Merrill Lynch and you agreed to set aside some of your money and keep it, say you had a 401k there, you agreed to keep a portion of your money in cash or a money market where they pay you 1 to 1.5%. The money market, which has to be readily available, they would take a third of that money and invest it in life settlements where they're earning 17 to 24% annually, paying you 1 point to 1.5 points. Now, the rest of your money, of course, you're gambling with, trying to beat the market. When do I get in? When do I get out? And we love clients like that because they end up on our doorstep at some point because they don't win. The only people that win are the brokers. They always win. So,
exactly. Yeah. Wall Street always wins in that way. So
and that's one reason that they don't like this.
Right.
They just don't.
Just like in the casino, the house always wins, and this is a fantastic vehicle to diversify some of your investments. Kevin, just as you mentioned, from a growth strategy standpoint, completely out of the system. This is not correlated to interest rates, economies, geopolitical trends,
the price of oil, nothing.
Price of oil, absolutely nothing.
Remember, these financial institutions, these are American life insurance companies rated A or better. I have obviously a lot of money in these. In fact, my partner and I are the largest investors in our funds. So as they say here in Texas, we eat our own cooking. These our retirement is essentially guaranteed by the Prudentials, the Mass Mutuals, the New York Lifes of the world. So we're pretty comfortable being in that position right now. You mentioned one other thing too. You correlated or you compared it to Wall Street. Or rather to Vegas, to a casino. It's better. Let me tell you why. 90 to 95% of all life insurance policies lapse. So people understand that. If I'm an insurance company, I'm going to price my product based on risk, but I know that 90 to 95% of those are going to pay me, where the insured pays the premiums for, on average, 7 years. And at the end of that 7 years, I don't have to pay anything back. Do I have to give them a return? Nope, I don't. So it's a gold mine. They're an absolute gold mine. Now, we have tapped into their gold mine and they don't like it. So, right. Well. There's an easy way to stop this. Stop issuing life insurance policies to older individuals. Will they do that? I don't think so, because they're too profitable. Bear in mind, the percent of policies that are settled in this country, less than 0.5% annually. So we are a bug on the windshield of the insurance companies.
You're listening to the Cashflow Ninja, the show helping people all over the world create monthly cash flow and achieve freedom today, not in 10, 20, 30, and or 40 years. This is a show where cash is not king, but cash flow is king. We will be right back after a word from our sponsors. My friend Dave Zook from The Real Asset Investor says you can be conventional or you can be wealthy. Pick one. The Real Asset Investor team creates value for investors looking for higher yield returns from ATM machines and self-storage investments. Their syndications offer attractive investment opportunities that produce strong cash flow, equity growth, huge tax incentives. They are truly passive and managed by a world-class team. To learn more about the exciting investment opportunities the Real Asset Investor offers, such as their ATM and self-storage syndications, please visit cashflowninja.com/Real Asset Investor.
Are you having a hard time finding great investment properties? Unfortunately, the best deals are rarely found locally. Successful investing begins with the right properties in the right markets. Norada Real Estate provides everything you need to invest in the best deals across the United States. Our simple, proven system will help you create real wealth and passive monthly cash flow. Learn how to find the best deals by downloading your free copy of The Ultimate Guide to Passive Real Estate Investing at noradarealestate.com. That's NORADA realestate.com.
Let's talk about some of the structures and fund structures that you guys use for your fund and how this is structured for investors.
Okay. The fund is structured, as I indicated, as a Regulation D Rule 506B security. So when an individual invests, they become essentially an owner or a shareholder in the fund. Each fund, right now we're on Fund 7, so the investors in Fund 7 are owners of that fund. Money is reported, or earnings are reported to them on a Form K-1, so we report as a partnership. But they are owners in a security. So if an individual has a self-directed IRA, if they have an IRA and they'd like to transfer it to a self-directed IRA, it's very easy to do. And then the IRA custodian, which we use Bank of Utah, makes the investment on behalf of their IRA. We have self-directed 401k funds that use this. We have individual investors. We have cash investors. We have some family trusts, mostly on the East Coast, the names of which I don't want to share, but you would very much recognize them. So it can be used as an investment vehicle really for virtually anybody. So the key is you're looking for growth. You're not looking for liquidity, and be prepared to sit on it for 8 to 10 years to experience all the growth.
Absolutely. And I just want to reiterate that because that's a very important piece into this. When we look at your overall wealth plan that you have in place and your systems and processes, liquidity is absolutely key. And then we've discussed on the show before, the next portion of that is income to invest in, the cash flow, tying in with the cash flow ninja theme, and create income streams. And then the third level of tier of that is the growth one, where this investment fits in really nicely. So this is not something where you can put your money into and then pick up the phone and call Kevin and say, I'd like to get some of my money out of it. That money is in that fund. Let's talk about some of the risks that are there. This is obviously non-correlated to markets, but what are some of the risks in these investments for investors?
Well, liquidity being the first one, and you indicated, people really you can't just call up and say, hey, I want to sell. It doesn't work like that. There is no sophisticated secondary market like there is for mutual funds and individual stocks. That being said, we have had a handful of investors who have needed to get a portion or all of their money out for whatever emergency reason, and we've always been able to accommodate them. What we have to do is we have to find another investor to take their place. Okay, so and we've always been able to do that. And if we can't, then we can always take them out by using either ourselves as individuals or one of the next fund will buy them out. And so it's never been a problem. The risks in this really are, if people live to 110, of course, that's a risk. So it's called a longevity fund. In other words, the length of time that we need before these policies all mature. But we do a lot of things to mitigate those risks. With an average age of 90 years old, we're not so concerned with, even though we do get medically underwritten life expectancy estimates done on every insured, we get 2 of them done. We aren't dependent upon that because, in truth, a perfectly healthy 90-year-old has how long to live? Even though as a society, we live longer and longer every year, the number of people, or as a percentage, who reach age 95 and 96 hasn't gone up at all in 100 years. So there's the chances that people are going to outlive our fund is very, very minimal. And we have systems in place where if a policy approaches the point of being unprofitable, we can sell it on what we call the tertiary market, because believe it or not, this is something that your investors aren't aware of, but there is a huge market for these between funds, between pension funds, between private equity such as ourselves and large institutional investors. So we would sell the policy before we'd take a loss on a policy. So the largest risk that we have is being able to manage the premiums. And for that, say, for example, we have a fund where we can raise up to $25 million in any fund. Typically, they're about $10 million to $12 million. So let's say, excuse me, so we have a fund of $10 million. With that money, okay, as the money comes in, we open a fund generally in February. As money comes in, once we cross about $300,000, we will begin to deploy the capital. In other words, we will start looking for policies. So we have a fund right now, Fund 7, and we have about 2 months or so to go, and we already have a ton of policies. So investors come in, they are purchasing a share of all of that death benefit. But we'll take that $10 million, okay, and we will set aside 40% right off the top for premiums. So we'll take $10 million, we'll leave $4 million in our custodial account at the Bank of Utah, and then we will invest $6 million. And with that $6 million, what we want to do is we want to buy death benefit between $25 and $35 million. We've been able to achieve that. So typically, roughly 2.5 to 3 times our money. So if we have $10 million, we set aside 4, we're going to use 6, we're going to get death benefit of, say, $25 million, and we know that they're all going to be paid out in 6 to 8 years. If you know a better investment, let me know. I don't know one with the same security and safety. Again, we don't touch the money. We can't touch the money. We're not even signers on the account. The custodian, which is Bank of Utah, handles it all. There are fees involved, very, very minimal, I think. We take a 1.5% fee up front when an investor invests, and that is the organizational and offering, because we front all the money to set up the fund, pay for the escrow, pay for the legal, the accounting, the printing, and then we get paid back from the organizational and offering fee, which is, like I said, 1.5%. Then we don't get paid our management fee, which is 2.5%, until the investor gets paid. So there are no annual fees for us. We get paid based upon how well we do. If policies pay early, then we get paid our management fee early. So if they all take 8 years, then it takes 8 years, but that's how it works. So we have a 2.5% management fee. 2.5% of the payout comes to us, as well as the 1.5% of the organizational and offering fee. So you have 1.5 up front and you have 2.5 on the back. So a total of 4% of the fund over 8 years, less than 0.5% a year. I don't know of any mutual fund. I don't know of any custodian, any broker that would work for that little, quite frankly. Right. But like I said, my dad was our first investor, and there's no way I'm going to have to explain to him why we're charging egregious fees. It doesn't work that way. So.
Yeah, and you've addressed a lot of points and notes that I've made over here too. Controlling fees is a big one, which you've spoken to. You've spoken about purchasing policies as a discount in it. These are some of the variables, obviously, that control the impacts the performance of the fund. Institutional risk is one thing that you addressed as well, and of course, the client success. With you guys, the track record and so forth. And you've addressed the time frame, which is a big one, which folks have to be absolutely clear on this, that this is not something where you can go and access your money readily away. Your money is tied up and tucked away in that. Kevin, what would be the best way for folks that are interested in this to reach out for more information, to learn more about this fund that you mentioned 2 more months that this is open for?
Yes, this one is open for about 2 more months, and then we'll open a new one. We'll start Penumbra Fund 8. So it doesn't matter when they contact us, but they'll be able to get into a fund. The best way is to either contact us through you or contact us directly. They can call us at area code 817. We're in Southlake, Texas. Area code 817-479-9770. That's area code 817-479-9770. 9770. We're about 5 miles to the west of the DFW, Dallas-Fort Worth Airport. If they want to come in and come visit us in person, we have clients who do that all the time. We're more than welcome, more than willing to come pick you up, bring you over, let you see the operation, take you to lunch, send you on your way. But we also have an online video presentation where people can go and view the video presentation. It has some numbers and it has a little bit more detail. And the way they do that is they go to www.thepenumbraplan.com, and then it'll ask for them to give their name and an email address and a password, because you have to have a password because it's password protected, because it's not for everybody. And the password is Penumbra, spelled P as in Paul, E-N as in Nancy, U-M-B-R-A, Penumbra, all lowercase. And then they'll be able to view the presentation. At the end of the presentation, they can actually click and view a frequently asked questions sheet. They can actually view the document itself, which is the private placement memorandum. We used to send that out in electronic versions, but quite frankly, twice it's been taken and by other competitors and used to form their own company. And so we're not interested in putting anybody else in business. So let them figure it out on their own from now on. But they can call you, of course. This is not something that is open to the general public. They have to come through an advisor. An advisor has to say, I think this is the right thing for you. And let's go from there. And so once they come to us, we'll speak with them, and if it's something where we think it's suitable for them, we'll gather some information. We'll create a subscription agreement for them and send it to them. It's very simple. Again, we don't touch the money. The bank handles all the money transfers. Doesn't matter what kind of money you have to invest. We're able to accommodate you.
Yeah, perfect. And I will put a page aside for that as well, but reach out to me at info@cashflowninja.com and I can put you in touch with Kevin too, just to see if this is a good fit for you. Now, Kevin, one thing, a habit I've observed from very wealthy and successful people is that they're always studying new subjects and learning new skill sets. What are you currently studying right now, and what skill sets are you currently learning?
Oh, heavens. I am always learning and I am always studying. If I was to say, what am I reading right now? I'm looking up, most of what my reading I do is books on tape or books on my Kindle. I'd have to grab that. One I just finished that was excellent was called $1 Billion Blueprint by, I think it's Stephen Gardner. In fact, I think I didn't write this. I wish I had. It talks about using this asset class in building wealth. If anybody wants that book, I'll happily pay for your investors or your clients. I'll happily give it to them. I'll send it to them on Kindle. Costs me all of 99 cents plus tax. I'm more than willing to do that. One of the best books that I've read that I encourage my children to read recently is it's a Daniel Pink book. I can't think of the name of it. What is it? To sell. It talks about selling, and people are so afraid of being in sales. And it talks about how really we are all in sales. 90% of us are in sales. If you're the mother who's trying to convince her 4-year-old that he needs to take a nap, you're selling. And we need to learn how to interact with people. And so I encourage my kids. I have one daughter I have 3 children, by the way. My wife and I have been married 31 years. She's the love of my life, the most beautiful woman in the world. And I have 3 beautiful kids, very blessed. I am far more blessed than I deserve, believe me. But I encourage them to expand their knowledge after college, to develop their instrument, which is their personality. Here's something I do. I used to tell my son, everybody's so focused on grades, and he was probably not the best student, very bright kid, but not the best student. And I told him, I said, it's more important to me that you sit with the weird kids at lunch than you make perfect grades. Learn how to befriend people. Learn how to make friends, because that's something that you won't learn the older you get. You can always learn a skill. You can always learn a trade. And I encourage my kids to learn to sell.
Absolutely. A very, very important skill set. And that book is the $1 Billion Playbook or Blueprint, you said?
$1 Billion Blueprint. Yeah.
Okay, perfect. Yeah. So we have a partnership actually with Audible. So listeners of the show can go to Cashflow Ninja book and get a free audiobook download and actually download that. So I'm actually going to put that on my list and check that out as well. It sounds very, very interesting. Kevin, our core message in our show is to leave our families, communities, and the world better than we found it by passing down a mindset, values, and principles to future generations, not just money. So if you cannot pass on any money to future generations and we're only allowed to pass on 3 principles to them to build wealth and achieve happiness and success, what would they be?
You know, this reminds me of a line in a movie. It was a Bruce Willis movie. I can't think. He's in a bar and a lady comes up to him and says to him, when you die, what will you leave behind that's not monetary? And here he is, a rich guy. And it literally left him dumbfounded and stayed with him. You know, family is very important to us. We spend a lot of time educating continually. But having integrity, having honor, is very important. Doing the right thing, and we have a faith-based reason for that. So I would say, if I were to leave anything behind, you know, I just want to be known as having a life well lived and having impacted many, not only monetarily, but having touched their lives. We've formed, my partner Jim and I, we've formed several nonprofits. Back in 2013, I rode a motorcycle at the age of 50. I don't know what. I rode my motorcycle from, let me give you a backstory, and forgive me. My best friend, his son died at 21 of testicular cancer. And so I wanted to do something to honor him. He was a great kid. And I knew him since he was in diapers. And so he said, you know, he always wanted to go to Alaska. And I said, you know, I want to go to Alaska. And so I created a charity called Riding with Josh. And I rode my motorcycle by myself from Fort Worth, Texas to the Arctic Circle and back. I camped along the way, made a lot of good friends, took 3 weeks. It's 9,518 miles. I'd never been away from my wife more than 2 nights. So I think she slept less than I did, quite frankly. But what people didn't know is that even though it's illegal, I carried his ashes with me. And I spread his ashes in the Arctic Circle. And we created a charity, and we raised some money, and we were able to raise a small amount, $17,000 for it. But that's something I'm very proud of, that we did that. So we'll just keep trying to learn and get better, I guess.
No, that's fascinating and such an inspiring story. Thank you so much for sharing that. And thank you so much for coming on the show and connecting again and providing so much value for my listeners. Can you give them the website URL where folks can learn more about your company?
The website again is thepenumbraplan.com. Penumbra is an astronomical term. They get extra points if they can figure out what penumbra is. But it's in order to, what we say is to get from the dark into the light, you have to pass through the penumbra. But it's thepenumbraplan.com. The password again is penumbra, all lowercase. They can reach us at 817-479-9770. You can reach me by email, at kevin@penumbrasolutions.com. And happy to answer any questions they've got at any time.
Fantastic. Well, thank you so much again for coming on the show and sharing your journey and your knowledge and providing so much value for my listeners. Kevin, this has been a blast.
It's been my privilege, MC. Thank you so much.
Life settlement investments have allowed financial and banking institutions to not only buy their equity contractually, but also diversify their capital from any economic market, and geopolitical risk. It's been part of the billion-dollar blueprint followed by institutional investors. And if you're an accredited investor, you can also now participate in this vehicle with enormous growth potential. You can watch an informational webinar presented by one of the premier organizations providing life settlement investments, Penumbra Solutions, at cashflowninja.com/life settlements. Thank you again for joining me on the Cashflow Ninja. If you like what you hear and appreciate what we're trying to build here, please subscribe, rate, and write a review for our show on iTunes and share our show with family, friends, and your network. If you're not a subscriber to our newsletter, you can sign up for our newsletter at cashflowninja.com. I want to thank you for spending your most precious resource with me today, your time. Until next time, my friend, live a life of passion and purpose on your terms. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.